This is Alan Bush with the Daily Financial Forecast for Tuesday, January 17th. Starting out with the stock index futures, under a little pressure this morning. We did have one economic report coming in on the weak side. That was the New York Fed index. Longer term, though, we do feel that earnings will ultimately rescue this market, as fourth quarter earnings are likely to be very good, and first and second quarter earnings of this year will probably be even better. So longer term, we do believe that the main trend is still higher across the board for all of the major indices, and we are still looking for new historical highs in all of those indices. Moving over to the currencies, the main feature there is the weakness in the dollar index, and this primarily due to President-elect Trump making comments indicating that, in his opinion, the dollar was too strong. So it looks like the currency wars are back on, and this very much had an impact on the currency trade, with the dollar lower, most other currencies trading higher. Also, there was some additional strength coming into the euro currency with some better economic numbers there, and some additional gains in the pound. This after inflation numbers in the UK coming in at the highest level in 2 years. Longer term, though, we do feel that the dollar index, although lower today, will be rescued by a Fed that remains hawkish, raising rates at least 1 to 2 times this year, but not the 3 times that the Fed has indicated that we will see at their most recent policy meeting. Interest rate markets quite a bit higher. Some of this linked to the economic report that we did have today coming in on the weak side. Also, there may be some flight to quality buying coming in. We do feel, though, that longer term, that the main trend is lower as inflation accelerates, and already we are seeing quite a few numbers this year showing that exactly that inflation is meeting some of the targets of several of the central banks. We do feel that commodity inflation is coming back. Wage inflation is going to expand. So even though we have bounced over the last 3 weeks or so in the credit markets, we are now up near resistance areas, and I would soon expect a leg down across the board, especially for the 30-year bonds. Also, with inflation in the news a bit more as of late, gold and silver advancing with very sharp gains in the gold today, at one point up over $21 an ounce. And we do feel that gold and silver will be quite a bit higher this year. In fact, gold, even though it was not the best performer in the last half of last year, it was up 9% on the year, and I would expect at least that or better to the upside in the gold market this year. So trade gold and silver, both from the long side. Inflation will be the catalyst to take those two markets, I think, substantially higher. So good trading, everyone. And once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.